right, maybe Ron, do you want to go ahead and get us started?
Absolutely, I'd be happy to. Hi, everybody. Welcome to our CannaCraft and Headset webinar. My name is Ron Gray. I'm the VP of Sales with CannaCraft. I'm sure I've met a lot of you before, and we look forward to meeting some of you that I haven't met yet. We all understand, I think, as our industry continues to professionalize, that we get some different tools at our disposal, one of those being data. So really the market leader from our perspective in data is Headset. A lot of the decisions that we make, both as far as what products we're going to come out with, in addition to what products we're going to continue to keep on board and maybe sunset, comes directly from this data. So we're really excited today to have Liz Connors on the line. Liz has been with Headset for about 4 years, and she's going to be taking us through some slides today about really what we've noticed or they've noticed for trends in the industry over the recent times, and also what we can expect for 2021. So without further ado, here's Liz. I think you're on mute, Liz.
Double clicked that mute button. Not a good time for double clicking. Thank you. Well, welcome everybody. Thanks for coming today. I wanted to briefly walk you through the agenda for today and then give you a little bit of background about Headset before we get started. So for today, we're going to do a couple of things. We're going to start with an overview of the California market, which is going to be done by Blake Ferry, who's an analyst here at Headset. He's then going to pop into revenue drivers and kind of give you a way to start thinking about the products that really are important to you this year, especially as we think about getting ready for the new year, right? So we're about to move into 2021. Now is a really great time to refocus and think about what are the most important pieces of your business. What do you want to see continue to happen in your business next year? And what are maybe some of those things that you can discontinue because they weren't as fruitful as you thought they would be? So from there, we'll get into revenue drivers as it relates to customers. So we're going to think about our products. So what products are really important, but then also we can think about our customers with that same type of methodology. So what customers are most important to us and what do we want to do about it this year? And then finally, we're going to have an overview from CannaCraft, where they compare some of the CannaCraft products and maybe some of the advantages that come from stocking those types of products, as well as talk a little bit about retail analytics.
If I can just add, Liz, if anybody has any questions, please put them in the chat. We'll try to get to them at the end. If there's a ton of questions, sometimes there have been during these webinars before, we'll put together a blog and send it out to everybody after the call. But we'll try to get to any pressing questions if you guys put them in the chat. Thanks.
Sure. Thank you. All right. So without further ado, let me give you a little bit of background about Headset in case you're not familiar. Headset is a cannabis intelligence company. So we offer data intelligence products for our customers to use. We have 3 main products. The first one is Insights. So Insights is our market data product. In this product, we offer real-time SKU level forecasts in, I think 11 markets now across the United States and Canada. So with this data, you can do things like understand what the competitive landscape looks like, what are pricing trends in the market, which brands are winning, which brands are losing. We even have some tools to help you better understand who is the cannabis consumer. So who is doing that buying, and then when are they shopping? So when are they in stores? And so in here, you can plan for what types of products to launch. You can better understand your competition, and you can do more strategic pricing. Another tool that we have is called Retailer. Retailer is offered exclusively to retailers. And unlike Insights, where we actually create the data with forecasts, Retail takes your own data and helps you leverage that data to drive your revenues. So we have 2 retailer products. Retailer Pulse is our free product, and anyone can sign up for that. Once you sign up, you can get connected immediately, and usually people have all of their dashboards connected within about 24 hours. So with Retailer Pulse, you'll get an idea of, or you'll get information and analytics about your business to help you better manage it. We also have Retailer Premium. So that's a premium product on top of our Retailer, which is a paid product. And in there, you can dive even deeper and understand things like market basket analytics. You can do customer segmentation. You can do demand planning for your store. So these are where we're starting to get into some of those really complex and critical questions to our business. And then finally, we have Bridge. Bridge is so named because it bridges the gap between retailers and manufacturers or brands or distributors. And in Bridge, what we do is the stores allow access to brands or distributors to their data. So for instance, you could allow CannaCraft access to CannaCraft sales within your stores so that CannaCraft can manage, are you low, are you out of stock, do you need more inventory sent to you, so that you can avoid those critical out of stocks and avoid that missed revenue. So with all that about Headset, I'm going to go ahead and let Blake take over for a while and give you some information about the California market and some of those revenue drivers.
Great, thanks, Liz. So just to quickly introduce myself, my name's Blake Ferry. I work for Liz here at Headset on the analytics team. I've been at Headset for about a year, and prior to that, I was working over at Amazon here in Seattle. And I'm excited to walk you guys through some interesting California revenue trends here. So the first section I'm going to go over is, it's just 3 slides. It's really high level. It's more just to kind of set the stage for you guys, just so we're kind of all on the same baseline level of understanding. So we're going to focus on these general sales metrics and growth in California. So here we're looking at, on the next slide, there we go. So what we're looking at here is adult use sales in California over the last 24 months. So the first thing you're going to notice here is how much growth the market has experienced over the past 2 years. Monthly sales have more than doubled since December 2018 to November 2020, and that's the most recent month we have there for a full month. So there's 2 blips here that you can really spot pretty quickly. The first one is in September 2019, and that's when that vape crisis kind of rolled through the US. So that drove down cannabis sales, primarily obviously in vapor pens. And that was just due to consumer concerns about those illicit black market items that had some health concerns for consumers. And the second one you'll notice here is more recently this year is that's kind of that March, April timeframe. You'll notice that drop from March to April, and that's due to the stay-at-home orders are issued. There's supply chain issues, closures, kind of a lot of problems there generally in the market, and that's not unique to just California. But you can see we'll go through it in the next couple slides. There was some panic buying kind of due to some uncertainty in the market. And the last item I'm going to call out here is the trend over the last few months. And so notice here there's been a decline in monthly sales in November. This is partially a function of just cannabis retail seasonality. Q4 and winter months tend to be kind of flat month over month, but you should expect them to definitely pick up steam as we head into Q1 of next year. So no alarm bells setting off there, just mostly due to seasonality. Next slide. Thank you, Liz. So here what we're looking at is we're going to dig into kind of the growth drivers of the sales we saw on the prior slide. So we can break that down into units and average item price, and we can gross those up to revenue. But this is just going to give us a better kind of understanding of what's going on in the marketplace. So notice here that we're looking at the trailing 12 months, not 24 like we were in the prior slide. So if we look at that 13 roughly % month over month sales jump from February to March this year, we can see what's driving that in the chart above, and that's kind of what I alluded to in the prior slide with when kind of COVID comes to the U.S. And so this chart really kind of outlines that initial bump in COVID sales was mostly due to a month over month increase of about 11% in units, and to a much lesser extent, a small increase in unit price, about 2%. So when we look at units and average item price, we start to kind of see a trend here, right? So while unit volume has absolutely remained high, just driving revenue, we also see that average item price has been increasing as well. It's grown from 3.9% to what's called 4% from March to November. And so when we actually dig into that increase, we see that the flower category is actually the main driver of that. So the average price for a flower item has grown from a little over $33 in March to about $37 in our most recent month. So that's an 11% increase. And we can actually break that down one level further into average EQ price for flower, which is actually the average price of a gram of flower, and package sizing. So we find overall that average EQ price has actually increased slightly, but the impact is made more so by a shift away from those small 1 gram packages to 8 quarters and half ounces. So you tend to see people shopping less and buying more when they are coming in. And they're also, flower is a great category for value buying. So people are definitely stocking up on, items in flower. Next slide, please. Okay, so now we're going to dig into some category level information. So this is the last slide again of our general market overview here. And I'd like to start by just kind of briefly mentioning how California is different than other developed US markets. So in California, sales definitely skew towards vapor pens. And you can see vapor pens there in that orange bar there at the top. And on the other hand, most states, sorry, just step back. Vapor pens are usually about a quarter of sales flown to that category. And in other states, we tend to see it about 15%. So it's about a 10% in absolute terms difference there. And so when we shift our focus to the kind of the March, November timeframe above, we can see that there's small but consistent category shifts. So in the initial phase of COVID, you can see that there's a bump in edible sales. So the kind of that right when the panic buying starts or when COVID comes, we start to see an increase in edible sales. And that's offset by a decrease in pre-roll sales. One could insinuate that COVID's a respiratory illness. People are maybe more looking to go move into non-inhalable products. But that shift didn't really last. We saw flower and pre-rolls really come roaring back over the summer. And as we kind of entered the fall, we're starting seeing a kind of a return to those pre-COVID. So, look at the December, January, February of this past year. You can start to see it kind of normalize a little bit. And that state is usually where flower is about 40% of category splits there, or category sales, I should say. And we're starting to see vapor pens go back to, about a quarter sales. Next slide, please. Great. So now this is where we start to talk about revenue drivers, right? And we're going to break it into two sections here. The first one is really about products, right? What products are really driving revenue in California? And we're going to start, so bear with me on this. We're going to actually talk about something that's not necessarily specific to cannabis at this point, or we'll get to that in a second, but it's called the Pareto Principle. And the general idea is that it came from a 19th century Italian economist whose name is Vilfredo Pareto, which is a great name. So he'd originally observed it like a really skewed relationship between wealth and population. So he originally had the theory that 20% of landowners accounted for about 80% of the wealth in Italy. And so it's really this concept of imbalance, right? Where a small portion of something accounts for a large impact in another area. And so this principle is actually can be well applied to a lot of different businesses and industries. And it's actually really relevant in consumer packaged goods. And so why the 80-20 split there is not really like a hard and fast rule. It just shows a clear imbalance of inputs and outputs, right? And a good example of this is in 2017, there was a study that was actually conducted by NYU, so that's a New York University, and that found that traditional non-cannabis CPG, there's about a 70-30 relationship between category sales and brands in the category. So meaning that the top 30% of brands in the given category account for about 70% of the category sales. And so this concept of imbalance really provides retailers and brands with a framework for analyzing their assortment and product lines. And so in this next slide, we're actually going to kind of talk through this Pareto principle, but focus specifically on cannabis retail in California. So I'm going to quickly explain kind of what's going on here. So in this slide, we're looking at the median SKU count by category in a kind of an average California retailer. That's that blue bar, meaning that the median number of unique products that a retailer has sold in the trailing 12 months. That's that bar. And the gold dots are the median category sales share of the top 20% of category products. So this is how we're looking to actually kind of apply that 80-20 rule we just talked about. And again, I don't remember that that's not a hard and fast rule, the 80-20. It's really specific to categories and industries. So let's look at cannabis here specifically, and let's look at vapor pens. So that's that far right area there. And so the median retailer in California sold about 491 unique vapor pen SKUs over the trailing 12 months. But we can see that 57% of vapor pen sales were from the top 20% of SKUs. So you can see that, again, that imbalance there. So a more pronounced example would be like the edible category. So if we look at edibles, we see the median retailer sold about 233 unique SKUs in the trailing 12 months. But we can also see that about 69% of edible sales came from the top 20% of those SKUs. So what does this really mean for retailers, right? So the application of this Pareto principle in California cannabis really shows us how important those top products are for retailers, right? And so the data above really shows us, again, how important having those best-selling SKUs in stock can affect category sales. And it really does suggest to retailers how they would do well to really lean into those top selling products, because those, again, they're driving a majority of your revenue. So in the next slide, we're going to walk through an example of how stocking out of SKUs, both on kind of an average selling SKU and then also really high selling SKUs, just to give you a perspective on how that can affect retail sales. Great, thank you, Liz. So this looks like a lot going on here, but it's really quite simple. So in the boxes above, we're calculating what we'll call the opportunity cost. You could also translate it as kind of as lost sales. So it breaks it out by kind of a median selling SKUs and the 90th percentile, so those really high top level selling SKUs. So if we look at that median box, that top box, and we look at just say the beverage category, we can see that if we take 5 median selling beverage SKUs, that they account for about $100 in daily sales. So that's about $20 a SKU. And you can see as we move across this table to the right, we're actually starting to multiply out if you're out of stock for 3 days in beverages, that's $500. And you can see how as you move out to the right over more times of stockouts, you're losing more money. So while we look at that median table, you might be looking at saying, okay, well, that's not really setting off any alarms, a couple $100 here and there, not a big deal. But when we start to look at that 90th percentile table on the bottom there, you can see really why those top products are important. So if we took, let's just say a retailer stocked out of their top 5 or 90th percentile selling flower SKUs for just 7 days, you could be looking at, what is that? About $16,000 in potential lost revenue. And if you bump that out to 2 weeks, so let's say you stock out, and this is again just kind of an average period. We're not even talking about the holiday season yet, but that's about $32,000 just in 2 weeks you're losing out on potentially. So again, these tables are just an example to really just reinforce the idea that retailers need to kind of know their top SKUs and carefully manage these top products. And again, as I kind of alluded to earlier, the financial impacts are really something to keep in mind, especially as we're moving into the holidays here, where there's periods of increased demand. There's a lot more potential for stockouts, and these charts are actually going to probably be more exponential in terms of the impact, right? You can go ahead and next slide, Liz. Okay, so far we've covered kind of SKU level analysis in this product section. But this is the last slide of the product section, by the way. And in this last slide, I want to kind of go over baskets, right? And these are specifically category baskets. So here we're going to look at basket composition. So we can break this out into 2 buckets, and that's dollars to a given category and dollars to all other categories. So the way to read this chart is on the x-axis, we have categories. So that would say, let's take beverages, for example. That tells me that for a basket that contains a beverage item, what number of the dollars of sales went to beverages and what went to other categories also in that basket. And we're also so that gives us, when we look at these additively, we can get to an average basket size. So when I add up that $23 and that $61, we're getting to roughly, an $84 average basket for beverages. And those dots there, those are basket penetrations. So that tells us in the trailing 12 months, roughly how many baskets as a percentage of the total contained a beverage item, right? So you can start to see, how there's a high concentration in flour, maybe low so in something more like beverages. So generally, this tells me that while baskets that have lower penetration, while they have low penetration, they tend to be the largest baskets. And they look to, because they have, a large amount of sales going to other categories, that looks like a pretty good upsell and cross-sell opportunity for other categories to get those consumers to buy those as well. And conversely, when we kind of look at inhalables, for example, so let's take flower and pre-roll, they tend to be higher penetration of baskets and have much smaller sales share to other categories. And this smaller share to other categories doesn't mean there isn't that upsell, cross-sell opportunity. So if we take flour, for example, there's about $15 going to, it's rounded up, called $16 going to other categories in flower baskets. And so to me, when I see that, that looks like a pretty prime opportunity to upsell or cross-sell someone and to maybe add on a pre-roll or something small at the register, maybe a single serving edible, something like that, that they can, you can build, again, keep building that basket. Next slide, please. Okay, Great. So we are now in kind of this last section of this headset presentation. I'm going to pass it here to Liz in a second, but I have a few more slides. So we've been focused on consumers and how they drive sales in retail. And so we're going to focus, I should say. And this first slide really sets the stage with kind of general spend metrics. And it outlines how much on average a cannabis consumer in California spends in a given month. And again, we're breaking this out by demographic buckets here. And the way we're doing that is we're breaking out by age. It's important to note that the age divisions here we're putting they're actually designed by the Pew Research Center, so this is not our creation. It's a widely accepted kind of time frame for age groups, and I'm sure you're familiar with some of them. And we also break it out by male, female, gender. And so the first trend I see here really generally applies to all age groups and genders, and that's really that large jump in monthly spend from Q4 2019 to Q2 2020. So you can really see that that trend line there across all demographics. And so that's really, again, when COVID comes onto the scene there in March, we see a huge spike in monthly spend. So that increased like almost 33% on average from February to April. And in Q3, we start to see a slight decrease in monthly spend. But since June, we've kind of seen the spend stabilize. That's that kind of flat trend line there. And it's important to note that that flat trend line is still about 27% higher than what it was pre-COVID. So again, this is really encouraging for retailers and brands, and it's really proving out that cannabis is viewed as an essential product, even during something like a public health crisis in times of economic hardship where there's not as much disposable income to spend on things. So again, really positive. Next slide. Okay, so we can now start to, again, kind of dig into we're going to dig through layers of this, right? So here we can look at customer spend from a slightly different angle. And here what we're going to do is look at demographic groups and how they spend relative to their share of the customer base in California. And so this visualization shows how each demographic group's share of the California customer base is related to the group's sales share of the total market. And then there's a ratio, which is that dot there that would be sales divided by customers. So kind of giving you a sense of relative share between the two. And we can see that millennials are the largest customer age group. They account for about 55% of total customers and 53% of total spend. So it's worth noting here that there is something we can split out in millennials. And that's that men have about 1-to-1 ratio of customer share and sales share. Whereas millennial women actually slightly under index in spend, so they're at about a ratio of 0.9 or 90%. But we'll dig more on that, I think, on the next slide. We can address that specifically. There's a reason for that. And similar to what we saw on the prior slide, we can see that Gen Z consumers, we saw that they have the lowest monthly spend, which makes sense. They likely have the lowest disposable income. But we can also see in this slide that they under index in spend relative to their customer share. And again, while you might notice those two things in the two slides, it's definitely something you should take with a grain of salt. It's the fastest growing age group, by far. They're aging into the market. That's where you're going to see the most growth in the next few years. And so, and as they age into the market, as they get older, as that base grows, they're actually, as they age and go through their careers, are likely to have more disposable income as well. So all positive things to look at in those younger age groups. And so in this next slide, now we're going to dig into the shopping habits of each of these demographic groups. And we're going to look specifically at basket size and trips. Cool. So here what we're looking at is average basket size on the left axis, and that's that blue bar. And on the right, we're looking at the average number of trips. And this is all over a 12-month period. And again, on the x-axis there, we're looking at the same demographic age group splits. And similar to the prior two slides, we can really see there's a correlation between age and how much you spend on cannabis, with the older demographic spending more. And you'll notice how each demographic is kind of grouped together by age. And you can see how male versus female stack up against one another. You can kind of see if you just kind of isolate each group, that is age group, and look at male, female, you can start to see how there's that correlation there. And so you can notice that, again, that pattern of basket size columns and the dots. And so across all age groups, it really appears that male consumers make more trips on average than their female counterparts. But it's also true that in the majority of age groups, female consumers have higher average basket sizes. So that's kind of what I alluded to in the prior slide, is that the big takeaway is that men shop more often, but they actually spend slightly less per trip they make. So again, that under-indexing spend on the prior slide is kind of misleading, right? Because we know that while men shop more, women spend more per trip when they shop, although they shop less. And that really kind of sums up my portion of the presentation. I'm actually going to pass it over to Liz now, who's going to talk more about a different segmentation idea, which is called RFM segmentation.
Great, thanks, Blake. I actually unmuted myself this time, so we're already starting off better than the last. So what I want to do is pivot us a little bit and take that Pareto principle that Blake talked about with products and start to think about our customers that way. So to do that, like Blake segmented all the products into categories, which is a very nice way to think about it. We want to do a segmentation for our customers as well, so that we can understand who really drives our revenue. There are probably an infinite number of ways to segment customers. So the model I'm going to use today is called an RFM model. We use this RFM model in our retailer premium platform to segment all of your customers. And we think that it's a really nice way, especially if you're starting in customer segmentation, to think about how customers really drive your bottom line. So an RFM model is based on three principles, or three components. The first is recency. So that's how recently was that shopper either in your store or ordering delivery from your store. Our next one is frequency. So how often does that shopper come into your store? And our last one is monetary value. So how important is that customer to the total sales of your store? So what we do is take all of the customers and run them through a model to give them each scores for how recently they've come in, how frequently they shop, and how much money they actually bring to the store to give people a segment. So I'm going to quickly talk about what those segments are, and then we'll talk about one, things that we can do to better engage people in those segments, but two, understanding the revenues of our store through that segmentation lens. So the first, as there are 10, I think, total segments. So I'm just going to quickly kind of talk about each one. I'm not going to go in depth into them. This presentation is available afterward, and so you can read each of these. We also did a whole webinar just about RFM segmentation models that you could go and listen to as well, if you really just like want to nerd out and make sure your glasses are all the way up and learn a little bit more. So the two that I really want to focus on today, where I'm really going to do most of my talking, is on these top two that we see, our champions and our loyal customers. So our champions are our customers that score very high on all three of those attributes. So they've come in very recently, they shop pretty often, and they spend a lot of money. These are your like white whale customers. These are the ones that are going to drive the most of your revenue, and we'll look at that for a typical store here in a moment. When we think about segmentation of our customers and strategies for growing those customers and growing our bottom lines, these type of customers are already very engaged with your store. They likely come in all the time. They likely know quite a bit about your products. So here, when we think about engaging this group of customers, we're probably thinking more about things like rewards campaigns for them, right? So if you were running an airline, this would be your business traveler that travels all the time. What do business travelers get? First class upgrades. So that's kind of a way that another industry thinks about getting those champions more engaged. So as we think about if you're running any type of CRM campaigns, these are the customers that we want to reward through rewards campaigns. Another set of customers is your loyal customers. So these customers come in very often. They also shop quite frequently, but they might not be as heavy as spenders as your champions. For loyal customers, a really great way to engage them and also drive your revenues is to look for upsell opportunities. So every time someone is in your store or on your website, you have the opportunity to introduce them to new products that might be higher margin for your store or might just be something interesting to them. So if you're not super familiar with upsell strategies, we also recently wrote an industry report about those, which you can go and read from our website. And we'll send out all these links afterwards, so you don't have to go and furiously Google if you're eating your sandwich right now during lunch. But upselling is a good example of upselling is when you go to McDonald's and people say, would you like to supersize that? I actually don't think they supersize anymore, but they used to, right? So this is an example of McDonald's trying to increase your spend at that retailer. Another restaurant example is when a waitress will offer, come up to the table and say, would you like dessert as well? So when customers come in and are purchasing flower, we have the chance to maybe move them into more premium flower. We have a chance to move them into brands that maybe give us better margins. And this would be a great strategy for your loyal customers. So those are the two I'm really going to focus on today. So I'm not going to go through every single one of these. Again, there's a whole nother webinar. But as we move down the chain, we get to potential loyalists. So these are ones that maybe we want to develop into loyal customers. We have recent customers. These are ones that would be newer to the store, but maybe haven't come in as often. So here's our chance to really get that like habit going, right? We want these people to come in often. These are our new fresh faces that we want to develop into champions over time. We have promising shoppers. So again, they're still pretty new, but they're not yet spending very much. So these might be ones to re-engage in your store with like offers to come back, maybe like basket offers. And now we'll get to our customers that maybe don't drive as much of our revenue, but still perhaps could require attention. So literally the next segment is called Need Attention. These are people that have come in recently, that shop fairly frequently, that have high monetary value, but might not have come in as recently. These are people that you might want to call back into your store, right? Maybe they just have had like a lapsed trip. And so what we want to do is kind of bring them back into that momentum of coming in often. And then we kind of move through these segments into people that either come in less often or have dipped in their recency. But what I mostly want to talk about is forking off that Pareto principle that Blake brought up before. So remember when we were looking at a store, we saw anywhere from 50 to 70% of category sales are done by the top 20% of brands. A similar phenomenon happens in stores with your customers. So as every customer walks into your store, they represent a potential revenue for you. When we look at those champions and those loyal customers, the ones at the very tip top of those RFM segmentations, we see that those two combined make up over 60% of your sales. So about 2/3 of the sales of your store, this is just for an average store in California. So for an average store in California, about 2/3 of their sales will come from those two segments, but those segments are less than 20% of their total customer base. So 1 in 5 of your customers that comes in actually represents $2 out of $3 of your revenue. So these are super important customers, and these are the customers that we want to keep engaged, that we want to keep happy, and that we want to continue to grow. And then we kind of move down the line. So for the only other one that I really want to call out are our visitors. So visitors are people that come into the store maybe once. This used to be a bit higher of our customer count and a bit higher of our revenue when it wasn't COVID and we could travel places and we had cannabis tourism. It was especially true in stores that are in very popular areas. So if you think about like ski resorts in Colorado, you think about the Strip in Las Vegas, you think about down on the beach in California. So stores that are in those types of locations generally see a lot of revenue from visitors, and they'll even see different splits of their categories. But visitors offer something else to us entirely, right? You probably only have that one single trip with them. And so identifying your visitors and steering them to products that you know that they will like and that maybe will be beneficial for your store is a really great strategy to make sure that you're maximizing those people that probably you're not going to have a lot of touch points with over the life of that customer. Finally, what I want to talk about is some of the basket sizes. And I think the reason that I think this is very interesting is let's look at those champions and those loyal and maybe even those can't lose customers, right? We see a similar basket size between each of those groups. So it doesn't mean that your loyal customers are going to come in and spend a bunch more in every single transaction. They're likely people that come in more often. And this is why we should be thinking about the customer kind of over the all three of those attributes, rather than just thinking about how much someone has spent on this individual transaction. And so lastly, I just want to tell you a little bit about our headset products. So if you're interested in leveraging your own data to gain valuable insights to increase revenues, you can reach out to info@headset.io. It's right there on the slides. We have two offerings for retailers. We have our Pulse product, which is free. You can be connected immediately and have analytics usually in as little as 24 hours. This is a set of about 20 dashboards, and they're entry level to help you support major retail analytics, including things like store revenues and profits. You can manage your stockouts. Remember, Blake walked through how important it is not to have stockouts. You can do reordering and inventory turnover and coverage analytics. You can analyze your discounts and your promotions. And you can also do bud tender or sales staff performance dashboards, which again, if you're thinking about upsell strategies or cross-sell strategies, that might be a really great way to manage whether or not those are working. If you want to go further, you can sign up for Retailer Premium, which offers an additional 20 dashboards. And this gives you more flexibility and insight and more complex analysis like market basket analysis. So where I was talking about doing some of those upsell or cross sells. There's customer analytics, including demographic analysis and that RFM segmentation. And there's demand planning to understand how your sales really change over the year and how do we make sure we have enough inventory, both every day, but also for like unusual events, things like 420 or the holiday season. So if you're interested in learning more about this, anybody that attended the webinar today, we're offering 25% off the first year of Retailer Premium if you sign up, I think before the end of the year. So you can reach out to info@headset.io or go to headset.io/retailer for more information. And we also have that industry report that gets more into some of the like market basket analytics that both Blake and I covered as strategies. So if you just want to do a bit more reading, you can find that at headset.io/industry-reports, or again, actually, I think there's even a link on here that when you get these slides, you can just click it so you don't have to remember all those words I just said. And so with that, I think I'd like to hand it over.
Hi, this is Angela. I'm CMO at CannaCraft, and really appreciate all of the great data insights that Liz and Blake have put together for us for today. And with us at CannaCraft, it's really about being a really valuable partner to you for your business as you look at ways of growing and scaling and having a successful 2021. So as the only company with brands and products in every category, from soft gels, tinctures, beverages, flowers, concentrates, and vape pens, we're also really working hard with our team to bring strong in-store merchandising, lots of digital love as we're seeing a lot of sales pivoting to digital, and also education for your staff and helping you with customer education so that we're educating them before they're even walking into your store. It really helps us with the customer spend and also in terms of helping you with your product mix. Next slide, please.
Sorry, I got booted from the meeting.
That's all right. I was talking about the right customer and product mix. So ready for slide for the next slide, please.
Great.
Right. As you'd seen throughout the slides from today, the California cannabis industry is really growing very rapidly. And we're really proud to be able to say that CannaCraft consumers are very valuable to your business because they are more frequent shoppers. Actually, on average, they shop 5 times more often than the average California cannabis consumer. And we've also, with your help, seen that our sales have grown quite a bit at 61% since October of last year, which we're really thankful and grateful for. Next slide, please. Yeah, so as part of that 80-20 rule and really looking at the right product mix, that higher value product is so critical in terms of looking at, do you have the right products within that 20% that's going to drive the 80% of your revenue? And what we know from Headset Data Intelligence is that our products, in terms of the retail marketplace, are higher value to other SKU shelf space, so that if you give us a space on your shelf, we know that we're going to outperform the proportion of merchandising space that you're able to offer to us. So in flower, we have a fair share ratio of 83.9%, and edibles at about 16%, and vape pens at 24%. That just means that in terms of the allocation of space that you give us in your store, we're going to be able to perform much better than what you've been able to provide. And that means that our products are quite enjoyable and what's preferred in the marketplace. Next slide, please. And thank you. So in addition to what we've seen in terms of our consumers shopping more often and that they're more valuable, we hope to be able to help you bring together the best product mix to help you with your business. And as you're pivoting towards digital, we've also found integration with iHeartJane incredibly valuable as well for a really seamless transaction with all of your consumers. So thank you so much for your time. Ron, if you want to take over for Q&A.
Sure, there are some questions that were posted to the chat. So either Blake or Liz, do you want to tackle those questions?
I think I'll take some of those, Ron. I'm happy to. Sure. All right. So there's a lot in there. I might not be able to answer all of them, but we can follow up with a blog post for sure. One of the questions that was in the chat was, once you segment in the RFM model, how does a retailer make this customer loyalty data actionable? And how do you execute on a one-on-one basis and target by segment? So that's a really great question. So once you know that these champions, right, are a decent percentage of your revenue, I think we saw for an average store, they're between 25 and 30% of total revenue. We can run targeted marketing campaigns. So through our retailer premium tool, you can actually export the lists and out into your CRM system. So whether you're doing targeted emails to people or you're doing SMS-based messages with any of the text message providers in the marketplace, you could download that and have those insights about the people. In fact, in that we don't just say it's that the customer is a champion. You can even get things like, what are their favorite categories? What do they usually spend? So that you can really build those offers to be tailored to that person. The next question I have is, curious what the percent by customer count is of each of the revenue driver customers across all of your data. That's from Sunny. And Sunny, I think there you were talking maybe about the demographics or maybe about the RFM segmentations, I'm not sure. But Blake, if you maybe want to just do a quick little thing on the demographics. I think one of your slides kind of showed that maybe those millennials were about 50% or so.
Yeah. So when we look at our generational kind of information, we see that, you know, millennials make up about, I'm just doing some mental math here, just over 50% of your store's revenue. So again, those kind of middle, I don't want to say middle-aged, but not quite baby boomers, not quite Gen Z. They're at a more comfortable place in their careers, more disposable income. They make up quite a bit of sales. You also see baby boomers who are at a stage in their life where they have much more disposable income. While they do account for a small amount of the actual customers walking through your door, they greatly outspend other groups for the reason that they have that extra disposable income. And then when we look at males and females, again, we know that their sales tend to skew towards men. So if you look at a gender division in your store sales, if you just ignore age groups, you're probably looking at about 2/3 of your sales coming from males. And then and your question might also, I think, also be looking at what Liz walked through in the customer segment, RFM segmentation. And there again, we see that it was about 20% of your most loyal customers make up about 60% of your revenue. So again, that's that 1 in 5 customers accounts for about $2 and $3 that come through your door.
Great, thanks, Blake. So quickly, I'll do a couple more of these. I had a really easy one. Are visitors defined as one-time buyers? In this case, yes, that was how we defined them. So those people that come into your store just one time are considered a visitor into your store because they didn't return. And actually, we leave them as a new customer in our segmentation models for, I think, 60 days. So if they're a one-time customer in their first 60 days, they'll be new. And if they age past 60 days, then they're going to end up in that visitors bucket as people that didn't return. We had another question, any metrics on delivery, online express pickup, and in-store sales? So if the question is like, as a retailer, can you access that? Yes, we have some dashboards that should help you be able to see your delivery sales, depending on the way that the point of sale you're connected to works and how you're actually classifying those sales. We have some dashboards there. If we're interested in just like kind of general market metrics, we did see delivery sales really increase, especially around like late March through April, May, and June. There was a lot more delivery in the market than ever before. Generally for delivery baskets, we see them be a lot larger. In stores, they can be almost 2 times the size of a basket, like an in-store basket. A lot of times that's because there's a delivery fee, right? And we want to recoup that delivery fee. So we might bundle a bunch of our transactions. Maybe we would have gone to the store 2 times, but we bundle them together into a single transaction to kind of spread that delivery fee. And then we actually see pretty interesting splits between delivery and in-store like category sales. So pre-rolls generally aren't very common in delivery baskets, especially compared to in-store. When we think about a pre-roll, probably those are more often an item that someone is adding on, something they saw in the store and popped into their basket, the same way you might grab a magazine at the register when you're buying your groceries. And so I think as retailers kind of move to change their online strategy for people shopping, like when you shop on, really major retail websites, a lot of times you get a customers also liked, would you like to add, like a lot of those kind of pop-ups. And I think as we start to move more to that, we'll see maybe the categories shift back and look a bit more like in store. I had one other thing on those. Oh, flower sales are a lot more common in delivery baskets than in store. They're still the majority in store, but in an online basket, a flower sale will usually be a bit more of that total basket.
So it looks like there's a few more questions. I think what we'll do is we'll get all those answered in that blog post that you guys were going to send out. So everybody's on the call that needs some more information from Headset, you're going to be receiving an email communication with all those follow-ups that Liz and Blake had talked about. A big thank you to those guys. A big thank you to everybody on the call. Without our partners, CannaCraft is nothing. This call is really intended to give you guys some insight to what we're looking at in the industry. Hopefully, if at the minimum with the free information that you can get from Headset, you can make some better decisions. That's what we're all here for. So looking forward to the future, to 2021 with you guys. And that's been it. I thank everybody very much for taking the time to get on this call. Thank you, Liz, Blake.
Yeah. Bye, everyone.
Yeah, thanks, guys.